I want to start by making sure that you understand that there's a huge difference between financing a condominium and financing a single family home. Specifically, there's 3 additional processes that you'll go through in financing a condo versus a single family home. And one of those processes can make or break the homebuyer experience and whether you even qualify or purchase that condo. And 2, can make or break the financial experience, the financial benefits of home ownership. So this information is super valuable, and I can't wait to give you a behind the scenes look at what it takes to finance a condo, but some of the most important things that you have to understand as a first-time home buyer or a real estate professional around the condo home buying process. Before we get started, I want to give you a background and some intel on who I am, and hopefully it gives some credibility as to why I'm giving you this information. My name is Dan Keller. I'm a branch manager and mortgage advisor at CrossCountry Mortgage. We help about 200 to 250 families a year finance real estate here in the Puget Sound area. And if you don't know, that puts me in the top 1% of all mortgage loan originators in the United States of America. So the amount of volume that we do, the amount of people that we help annually, gives me the credibility to give you this information. And being located right here in the heart of the Puget Sound, many of our first-time home buyers, because of the affordability of condos, because of the accessibility to downtown Seattle or downtown Mill Creek or downtown Kirkland or Bellevue or Everett or Linwood, many of our first-time home buyers purchase condominiums. And so we have a lot of experience navigating our clients through this process, but more specifically, the resale certificate, and understanding what you need to know in order to make this a great experience and a great financial experience. What I'm going to do today is I'm going to start off by talking about some of the mistakes that I've seen made over my 12-year journey as a mortgage professional. And I'm going to give you some information so that you can maybe avoid making those mistakes in the future. The biggest mistake that I see is that real estate professionals, mortgage lenders, and first-time home buyers do not clearly understand the resale certificate and how to read it, how to interpret the information in it. And primarily, I see that gap in the real estate community. See, I've been in the mortgage industry for over 12 years. By the time I get the resale certificate to send into underwriting, to have it reviewed and approved, we assume as lenders, and most mortgage banks, credit unions assume, that the borrower's already read it. The borrower and the real estate agents are already fully aware of the HOA and the condo. And our job is to make sure that it's warrantable or non-warrantable, to make sure it's financeable, and that's it. Well, what I've done, because I've seen this gap where there's a lack of education around purchasing condos, there's a lack of knowledge in the real estate communities around what you should look out for when purchasing a condo and whether or not this is a good investment. I've put together this information for you. And this is definitely not a knock against real estate professionals. It's not their fault. There's just a lack of training. And so this presentation that you're seeing today, I've given at real estate offices, I've given to homeowners association boards, and I give to every single one of my first-time home buyers that find themselves purchasing a condominium. So let's go ahead and get started. You've heard me talk about it already, and I'm going to talk about it probably 90% of today's presentation, and that's the resale certificate. The resale certificate is made up of essentially five sections. The first, which is extremely important, the rules and regulations. And I'm going to go into detail each one of these. I just want to give you an overview. Rules and regulations. The second is the annual budget. The third, the reserves. The fourth, the reserves study. And the fifth section are the meetings minutes. Now, most resale certificates have a summary section that kind of gives you an overview of 2 or 3 of those things, specifically the budget, the meetings, the minutes, and the reserves, which are the 3 most important things. But I want to kind of hit pause. And if you are a home buyer right now or a real estate professional, this is important for you to understand. As you're looking at condominiums to purchase, the condominium is either going to be warrantable, meaning financeable with conventional financing, or non-warrantable, meaning you need portfolio financing to purchase that. Now, I'm only going to talk about non-warrantable condos because I want you to kind of put it in the back of your mind red flag, what not to buy, okay? Non-warrantable condos will lack the resellability that you're gonna want. It's gonna be tougher to sell them down the road. The other thing is you're gonna need to put 20% down or greater, and you're gonna be subject to a higher interest rate. The other thing, what qualifies them as non-warrantable, normally the main thing is normally there's pending litigations, or one entity like the owner of the HOA, or excuse me, the owner of the condo project, or someone as an investor owns more than a couple of units. If there's greater than, I believe if there's greater than 20 units, you can't have a single entity ownership of 25% or more of the units. So those are the main things that disqualify a condo as a warrantable condo. Let's talk about warrantable condos. Warrantable condos typically are approved for conventional financing. They meet Fannie Mae, Freddie Mac, and Ginnie Mae's criteria for ensuring a condo purchase, financing for a condo purchase. Now, there's two types of warrantable condo approvals at a lender. First, if you're putting down 10% or more, you qualify for a limited review. Now, that's a much easier underwriting process. If you're putting down less than 10%, the condominium project, the HOA is going to be subject to a full review. And I'm going to talk about what a full review and a limited review is. A limited review is a review of the HOA master insurance policy. It's an assessment of all the HOA dues collected. And then it's a review of the HOA's foreclosure process, where the lender fits in, where the HOA fits in the event of a foreclosure. Now, a full review, where we're talking about less than 10%, like a 3% down Fannie Mae or a 5% down Fannie Mae or Freddie Mac home loan, we're gonna have to review the HOA master policy. We're gonna review a full assessment of the HOA dues collected. We're going to look at, like we did in a limited review, the HOA's foreclosure policy. We're going to do a deep dive into the annual budget and the reserve studies. We're going to do a common expense delinquencies report. This is the check-in to see how many people are behind on their dues, how many people are current, and ownership responsibilities and regulations. That's the rules and regulations part of the resale cert. We're going to look at the electrical meter situation, and we're going to look at the investor to owner occupied ratio. All of that's looked at on a full review. Now, let's jump into what we were talking about earlier, the resale certificate and what that means. And if you go back to the full review, essentially the full review is a full audit of the entire resale certificate, and I'll tell you what that means. So the first section, rules and responsibilities. I want to try to make sure that you understand here too that I'm not talking as a lender right now. What we're looking for, what to keep your eyes open for. What I want to do right now is I want to jump on your side of the table with you as a home buyer. So as you're looking at the resale certificate under rules and regulations, this is where you're going to find out the pet policy. Do they allow pets? Do they allow dogs? Is there a weight limit? Stuff like that. You're going to see the rental caps, whether or not you can rent out your house or maybe use it as an Airbnb down the road. It's going to give you any parking restrictions that they may or may not have. You're going to also find the rules for the common areas. So there's a lot of, I think the most important thing, if I'm buying a condo, I'm looking at the rules and regulations right away. I will tell you this. If you have a hard time following rules, if you're that person that always got in trouble in high school and college, and you haven't changed, buying a condo might not be the best option for you. I'm just going to throw that out there because there are some rules that you have to follow. Now, the second part of the resale cert is the annual budget, and this is right up there with rules and regulations because, again, remember this. When you purchase a condo, you're purchasing ownership in that condominium project. You're purchasing stock, if you will, in that HOA. And so you want to look at the budget. You want to look at who's paying, who's not. You want to look at the reserves. Lenders want to see that there's a 10% or greater reserve balance. So total amount of HOA dues collected annually, 10% of that they want to make sure that they have that in savings. You want to make sure that there are additional reserves for building maintenance. Is it running low? Because that could result in a special assessment down the road where your HOA dues could go up. The last thing is you want to look at the total cost per year to manage and run that HOA. That's so important to understand. So as we're looking at reserves, speaking of reserves, the third part of the resale certificate is reserves. Think of it as your savings account, okay? There's money in there, and it's money to be used for a rainy day or for emergencies or repairs. And so what we've got here is, like I said, lenders want to see 10% or greater in there. I'd like to see more. If I'm a home buyer, I want to see a little bit more than 10%, obviously. You want to see that there's enough in there to cover for future repairs and expenses, depending on how old the condo project is or the building. And then you need to understand any pending special assessments. You need to understand if there are any repairs that are coming down in the next 1 to 2 to 3 years, and I'll show you where to find that. The third part is the reserve study. This is where it's going to show you, they're going to do a 30 and a 50-year overview maintenance schedule in regards to when the next, for the roof, for example, the roof, the siding, painting, landscaping, any repairs that'll have to take place, re-asphalting the parking lot, stuff like that, it'll all be found in the reserve study. So you can compare the reserve study with the amount of money in reserves to see if you're buying a project, you're buying into an HOA that's going to cost money down the road. Spend some time looking at this with your agent. This is a section too. If you're not getting the feedback and the advice you want from your real estate agent, spend the extra money to go sit down and talk to a real estate attorney, and I can introduce you to one locally if you'd like. Okay, number 5, meetings, the meeting minutes and declarations. This is so important to read and understand, because this is going to give you the real-time relevance of what's going on in the HOA. It's going to give you insight into the HOA complex. It's going to give you updates, repairs that are coming down the line. It's going to also talk about delinquencies, who's behind on their HOA dues. This is where you'll find parking space and storage information, the numbers, and how many are available. Sometimes some go for sale. Some people can sell their parking spots. Some people can sell their garages. So this is where you'll find information there. And then you can understand here your percent of home ownership. So they take the square footage of your unit and they factor it into the total square footage of the property. So if there is a special assessment, you'll understand your ratio that you'll have to pay if HOA dues or if you're hit with a special assessment. Let me jump back on my side of the table and talk about things that lenders, there's 5 things that all lenders require. They want to see reserves. They want to see who's behind on their dues. They want to see the rental ratio. How many investors, how many renters are in there versus homeowners. They definitely want to see if there's any special assessments or pending litigations. Those are the 5 things that every lender is going to look at. Speaking of lenders, let's talk about what it takes to finance a condo. There's a lot of options out there. You can purchase a condo with as low as 0 down with a VA or a USDA home loan, excuse me, or even a state bond loan. Now, it's important to understand that a VA approved condo is not the same as an FHA approved condo, and they're separate entities. They have to be approved under their own guidelines. So be cautious of that. Just come see me for more information. If you are a veteran and you have access to your VA eligibility, or if you have less than 700 credit score and you're going with an FHA loan, you'll need to make sure that you're looking at FHA approved condos, okay? The next up, 3% conventional, 5% down conventional, 10% down conventional, and then the 20% down conventional. Remember, anything over 10% down or greater, you'll get a limited review. And then lastly, here in Seattle, Bellevue, Kirkland, anything, a loan amount over $741,000 puts you in the jumbo category, and you can purchase condos in the jumbo price point. And it goes through a similar type review process of the resale certificate. I'm gonna wrap up with this, some of the common Q&As, common frequently asked questions. Is a co-op a condo? Yes, it is kind of like a condo, but the financing options are completely different. Most of the time they're non-warrantable, and so I'm not focusing on co-ops today, but yeah, I get that asked a lot. Can I finance a co-op? Yes, but it's not like a condo. How do I find out if a condo is FHA or VA approved? Great question. I can give you the link right here above this video. You'll see a link to the HUD website where you can type it in to see if the condo project is FHA approved. If it is, awesome. If it's not, you're gonna have to go conventional. VA is a little bit different. You have to reach out to me and I have to look that up for you. Number 3, how do I get a condo complex FHA approved. I use a third-party company to help me with that. It's about $500. But if you're an HOA, if you're sitting on the board of an HOA or a real estate agent and you want to see a condo complex get FHA financing, come see me and I can help you get that. Number 4, why are rates higher for condos? Good question. 30-year fixed rates are slightly higher for a condominium purchase just because of the risk associated with it. You have neighbors below, above, below, front, back, and on the side of you, and the risk of something happening, especially with the HOA convening, the risk of you defaulting is a little bit higher with condos than a single family home. And lastly, does it take longer to purchase a condo? No, it doesn't. Not in our office. We have a condo review board inside of our bank. Makes it so great, it makes it simple, not to mention you have an expert up front working on the condo approval. So I want to close with this. If you have any questions, additional questions about purchasing a condo, if you're a real estate agent, I want to partner with you. It's so important that you have a professional lender in today's market. If you're a first-time home buyer, I promise you, our relationship as a lender through the advice that we give and our experience will save you money. I can guarantee you that. If you have any questions, I want you to reach out to me. Above this video is a link to a web page that I built for condo purchases. And I look forward to having a conversation with you down the road, okay? Enjoy your home search, and I'll talk to you later.